If you were to give me some free time and say, hey, go do anything you want to do, within an hour you'd find me at the nearest high-stakes poker table I can find. I fell in love with the game back in my college dorm room days, staying up all night with the guys betting quarters and quoting Matt Damon from the cult classic Rounders. I love the strategy, I love the competition, reading people, the math, the odds, but most importantly, I love winning. I know. Shocking, right? Well, particularly I love winning money. Despite what the ESPN highlight videos might show you, the best poker players in the world very much try to avoid going all in. They prefer to get involved in smaller pots that they can gradually accumulate chips and create an advantage by bullying the other players off their hand. This term is what's called fold equity, which means you may not have the best hand, but by potentially forcing a better hand to fold through aggression, you gain an edge. The best players don't like to be in a position where they have to risk all of their chips. Why? Because even with the best hand, and with two or even one card yet to come, they have a chance of being knocked out of the game and completely knocked out and headed to the rail. It's the worst feeling for a poker player to see their chips disappear and know they can't play anymore. You know, even when they're running good, meaning everything is going their way, they're making the right moves at the right times, and on top of that, they're catching good cards. Good players don't like to go all in, and they certainly don't like it when other players go all in on them, even when they're pretty sure they have the best hand. Just like a skilled poker player, you want to avoid going all in on any one investment at all costs, even when it's running so well. Even when it appears there's no way it could drop. Because if it does, and there's always that chance, no matter how solid it is, if it tanks, you're out of the game. Back in 2016, I began my journey as a real estate investor. I researched and learned as much as I could and eventually settled upon the Indianapolis market, specifically residential single family and up to 4 units. The first 12 months, I was crushing it. At the prices I had purchased versus the rents, I was getting 30 to 40% returns. I had stumbled onto a company in a market that was real estate gold, or so I thought. I told a lot of people about it because I believed in the operation and the model. I brought in over 20 investors, friends, colleagues, and friends of theirs. As the saying goes, it worked until it didn't. Come to find out, the turnkey operator I had purchased from and who also managed the properties was paying out fake rents. Now, why on earth would anyone pay out fake rents? Because it was a Ponzi scheme. He was luring us in with consistently great returns and incentivizing us to purchase more properties that he didn't actually rehab nor bother to place a tenant. Just like any other business or operation not built on solid fundamentals, it came crashing down, and really fucking hard at that. All of my 15 units went from full rent to no rent within a month. On top of that, there were squatters, trashed out units that needed a shit ton of rehab that I had already paid for that was never done because all they did was put lipstick on a pig. Not one unit had working plumbing, electrical, or heat, and to make matters worse, I referred 20 other investors to this. The pressure I felt was nearly unbearable. And so much that could have been avoided with some trust but verification. None of us ordered a background check on this man. None of us ordered inspections. And too many investors, including me, put too much of their assets into this one asset because it started off so strong. It was like the famous tennis player Anna Kournikova. It looked good, but couldn't win. One lady that I referred invested her entire net worth into the deals. Had she properly diversified her asset allocation, yes, it would have stung, but it wouldn't have been a huge life-altering ordeal that it ended up becoming. As good as cryptocurrency looks right now, and as I record this, it's going parabolic, and as staggering as the returns, are predicted to be, and as quickly as this asset goes up, I've learned my lessons. I'm not going all in. What looks really good right now can change very quickly, especially in a highly volatile asset. As new investable income flows in, it will then flow in to increase all of my asset classes. Whole life high cash value insurance, pre-IPOs, value and growth stocks, new real estate projects, self-storage indication, and cryptocurrency. Asset allocation, although not sexy and fun like crypto, is how we win the game here at Indestructible Wealth. Make sure you smash the subscribe button, hit the like button to destroy the YouTube algorithm, and share my YouTube channel. That way you can help all your friends and family create indestructible wealth. All my social medias are in the description below. Thanks for watching, and I'll see you in the next video.